Welcome back to the channel. This is Sean.rampersaud here with the Mortgage Group again. Today we're going to be talking about one of my favorite topics. It's about rental properties. If you've been following me, you probably know I love investing in rental properties. I just think it's such a good way to accumulate income over time and to diversify my investment portfolio. So specifically what we're going to talk about is a rental property a good investment? There's a load of information on the internet right now and a ton of gurus that are talking about rental properties and why you shouldn't buy them and you should buy this and you should buy that. But I'm going to tell you from my experience, it's been fantastic. And I want to get right into it with you and explain the reasons I think rental properties are good, who rental properties are actually for, and who should not invest in rental properties, because there is a bad side to it too. And if you can't handle the stresses of what comes with a rental property, you're going to nosedive. I've had some really good bad experiences and I've had some less, but I've had some really bad experiences as well. So stay tuned and we'll get right into what a rental property is good for. First thing, of course, that a rental property is good for is passive income. There's tons of information on YouTube right now from people that are talking about creating passive income for yourself. Passive income is basically income where you didn't have to do anything to achieve it. Now, a rental property is not totally passive income. I am just going to pre-warn you about that. If somebody tells you it's totally passive and you don't have to do anything, you just money's going to be flowing in, they're wrong. They're lying to you, but it is a form of as close as you can get to passive income. Next thing, in actually my favorite, is the appreciation of property. What I find over time is property values are always going up. Okay. So you've probably seen in your market at some point the market go down and your property was worth 50 grand less, and then it went back up, and markets go up and down. But over time, for the last 200 years, property value have actually gone up. So, I mean, when your parents were young, you might have been able to buy a property for $13,000, $20,000, $50,000, really cheap. Even when I bought my first property around 20 years ago, actually more than 20 years ago, but don't age me. I only paid $69,000 for a 3-bedroom townhouse. The same property right now would be worth about $250,000. So property will go up in value over time, guaranteed. And the good thing is you'll reap those rewards. If you can last through the cycles of up and down and just allow that property to pay itself off and appreciate in value over time, your overall net worth is going to increase. Next thing that's fantastic about rental properties is the tax deductions. So you can deduct taxes for a ton of different things. All the repairs you do to the property, all of the taxes, all of the interest you pay on the property, these are all tax deductible, and you can even depreciate the value of a property. So for example, if you purchased a townhouse, $180,000, let's say as an example, and you think that townhouse after 2 years or 3 years or 5 years of owning it is only worth about $150,000 in replacement value, and then there's been depreciation on the property. You give that depreciation to your accountant or tax person or whatever, and you'll find that the property will be, you'll have to pay less taxes on it. As simple as that. And finally, leverage. This is absolutely huge. So leverage is when your property has some equity in it. You can take that money out of the property and use it for other things. You might put some of it down on purchasing another property, so using it as a down payment for another property. You might use your leverage to get a car loan or a business loan. Some people do it for a franchise loan. So for example, you want to buy a Starbucks. They're going to want to know how much equity you have in your home. If you've got $300,000 in equity, there's $300,000 towards the expected amount that the franchise wants you to have. But like every single investment, there are some downfalls to it. So some of the cons of owning a rental property is what I'm going to talk about next. First is the upfront cost. So the upfront cost of real estate is very expensive. You can't just go and buy a share in real estate unless you're investing in a real estate trust, which you'll never get the return on investment that you would by buying an individual property. So that's the first thing, is that the upfront cost is very high. You might even have to do some renovations to a property, and that can also be very expensive. Next is tenant risk. If you have tenants in a property, you might have a bad tenant, and that bad tenant might damage the property or not pay their utilities or not pay rent. So there are some issues with tenant rights and what the tenant could do potentially to the property. I did have property myself where I've had a tenant trash it. Now I am so careful about who I rent the property to. I'll even rent it cheaper, a little bit cheaper than market value. So I have tons and tons of renters to sift through where I can pick and choose which ones I want. The last lady I rented a property to, her license plate said Psalms 5.1 or something like that. And I knew right away, I said, oh, this lady's going to be good. It's going to be a non-issue. Next is market risk. So if the market potentially goes down and your property, let's say, is on a variable rate and the interest rates go crazy, well, that's an example of a market risk. Or if the value goes down in your local area, then that's another potential risk. But keep in mind, the values do over time always end up going up. And of course, ongoing maintenance. Every property that you buy, doesn't matter, you're going to need to do some maintenance to it. Sometimes it's going to need a paint job. Sometimes it's going to need shingles. Sometimes it might need a new window because a window broke. Doesn't matter. Overall, if you're banking money and you're cash flowing money in that property, then you should have more than enough money for the repairs. But you can't blow all of the money that you earn on the property. So let's say for your property is a cash flowing property. That means that overall the rent payments are more than what all the expenses are. Let's say you're profiting by $300 a month. That's $3,600 a year. You should be able to create a bankroll for yourself to cover all expenses. That's how condo boards do it. So, condo boards where they're taking care of 200 units of an apartment complex, that type of thing. They're always taking into consideration the expenses that could come up. Like, okay, furnace is needed, or a boiler, or whatever, shingles are needed at some time in the future. So you have to take all those things into consideration when you own a rental property. So what makes a rental property a good investment? That's the next thing. So the first thing, of course, is cash flow. If the rental property is cash flowing, that means that the rent is more than the expenses, then that's a good rental property. If you're not having to go out of your pocket for any expense, that's a great rental property. The next thing is potential appreciation. So if you're in a market where it's too volatile, but it's slowly going up, and the property all properties are appreciating in value, then that would definitely be a good property to own. Now, if you're buying on the absolute high and then the market's going to crater, then yeah, of course, that's not a good property. But how are you supposed to know? You don't. So that's why you should always kind of be buying rental property. You should always have it in mind, because most rental properties will always appreciate. I guess you always have to think on, just like everything else, you have to think about your return on investment. So return on investment is absolutely huge. And with rental properties, like I said, there's multiple return on investments. There's a monthly return on investment. If the rent is higher than the expenses, there's also appreciation over time. That's the property value increasing in value over time. As long as you're taking care of the property should increase in value over time. So what kind of investor should invest in rental properties? Well, first of all, most people should own a property if you can handle dealing with tenants and some of the issues tenants will come up with. Then you should rent property. If you can't deal with any issues, like I have an uncle right now, he owns a rental property and his tenants giving him a hard time. They're not paying the rent on time, so he's having to go out of expense because he didn't save that money in a bankroll for these kind of issues. Then he probably shouldn't be owning property. He's all stressed out about it. It's affecting his day by day. I suggested to him that he should just sell it or let me take over that property for him. So those type of people that have anxiety about owning a property, renting a property, they should definitely not own a rental property. It's just not always for them. If you are in that situation and your property is cash flowing well, you can hire a property management company to take over that aspect of it. So find renters and repairs and all of that stuff can be in there. But property management company will cost you 10 to 15% of what you're getting for rent. So you're going to have to take that into account. People who should invest in real estate are people that have some patience, okay? A person that can call an electrician up or source an electrician and say, hey, you know, we're having issues with this light fixture or whatever. Or somebody that can get in there and do some painting themselves if you're a hands-on person. I'm not really a hands-on person, so I have somebody that I get to take care of all of the properties for me, and they go in and they do all the repairs. There are going to be repairs needed. So if you have zero patience, then don't buy a rental property unless it's really cash flowing and you can hire a property management company to take care of it. But if you do have a little bit of patience, investing in property could be a huge benefit to you. Like I said, you're getting the appreciated value. And you know, the great thing about the appreciated value is most people will keep their rental properties into retirement. That's giving you a monthly income because the property is paid off. And when you sell the property, you're probably making way less money than when you were working. So if you're retired, you're not working, obviously, and the income that's coming in is less. That means when you dispose of the property, that means when you sell the property, you're going to pay way less in taxes on the appreciation of the property. So final thoughts about rental properties is I love them. I think a rental property is a fantastic investment. It shouldn't be the only thing you're investing your money into. I mean, you don't want to put your money all your eggs in one basket. And I did another video about diversification. You should check it out on my channel about diversifying your different investments. But rental property can be fantastic for the right person. If you are a person with high anxiety that can't deal with, you know, situations, then definitely don't buy a rental property. Guys, thanks for watching the video. Please like and subscribe to the channel. It helps me get this good information out to everyone that needs it, and it helps the YouTube algorithm go up or whatever it might be. Thanks again for watching. Take care.